Hello, welcome to the weekly technical analysis review for Tuesday, January the 8th. I'm Rafi Barajan, currency analyst at XM.com. The pairs we're going to look at for this week are the dollar yen, the dollar CAD, and euro pound. Starting first with dollar yen in the daily chart, we can see that the pair is seeing some positive upside momentum at the moment. The stochastics are pointing upwards. However, if you have a look at the RSI, although it has recovered above oversold territory, it's still very much in bearish ground. So there's still plenty of downside risks. We would need to see dollar yen climbing above the 50% Fibonacci retracement level of the uplift from 104.60 to 114.54 in order to see more convincing signs of a sustainable recovery. So that 50% Fibonacci comes down 109.58, and then we've got the 38.2% Fibonacci at 110.75. However, if we were to see a shift back to strongly bullish bias, we would need to see the pair recovering above 112.20. That's the 23.6% Fibonacci, and is just below the 50-day moving average. And then above that, we could see the pair heading back towards that 11-month high from all the way back in the autumn. To the downside, though, if the pair was to fall back below the 61.8% Fibonacci, so that's the immediate support around 108.41, we could see the pair heading back towards that 9-month low of 106.45, and then if that does occur, we would see a shift of the current neutral picture in the medium term turning to a more bearish one. Let's now turn to USD versus the Canadian dollar. We can see that the pair pierced below the ascending trend line and is now trading just below its 50-day moving average. There is immediate intraday resistance at the 1.33 level. If it manages to recover above that, then the next we could see another hurdle at the 38.2% Fibonacci at 1.3327. However, the pair would need to climb above the 23.6% Fibonacci retracement of the up leg from 1.2781 to 1.3664. That's around 1.3455 in order to see the significant easing of the downside pressure, and that would also take prices back above the ascending trend line, and then we could see a USDCAD making a fresh attempt towards that 19-month high of 1.3664. But that's not looking very likely at the moment because the stochastics are very much in oversold territory at the moment. So perhaps we could see an upside correction. But looking at the MACD, we can see the histogram continues to decline, falling towards zero and way below its red signal line. So further losses, we would see the 50% Fibonacci at 1.3223 coming into focus. A break below that level could accelerate the declines. We could see further losses, and then below that we've got the 61.8% Fibonacci at 1.3118. In the medium-term picture, the pair is just about holding to its bullish outlook. If we see substantial drop below the 50-day moving average, we could see that outlook at risk of turning neutral and possibly bearish if prices fall even lower, potentially below the 200-day moving average at around 1.3070. And finally, looking at euro pound, the near-term bias is very neutral at the moment. RSI has flatlined at 50. The MACD is slowly falling towards the zero level. although with prices being above the 50-day and 200-day moving averages. So there's still some bullish, some form of a bullish structure in place in the more medium-term outlook. So if we do see further gains potentially above the 20-day moving average, so that's the initial resistance to the upside at 0.90, and then above that 0.9040 level, which has been heavily congested area in the past. So a break above 0.9040, we could see that the neutral to bullish outlook becoming more convincingly bullish, and then possibly we could see euro pound making another challenge of that 16 months high of 0.9111. To the downside, immediate support should come from around 0.8920. That was a key resistance level in the past, so it could act as key support if we see a further slide. And then below that there's the 0.89 level, that's the 50-day moving average, and then even lower there's the 0.8850 area, that's the 200-day moving average. And then if the euro pound doesn't manage to hold above its moving averages, it could head back towards that 11-month low of 0.8655 we saw back in November. So that's it from me. Thank you very much for watching, and have a great day.